Oliver, there's been a big drop in the share price of Carnival this morning, the cruise company, the one that operates all these fancy cruise liners. It's had a profit warning, and it's not the first one this year.
No, it also reduced its outlook in the first quarter results a couple of months ago. What's happened is that Carnival had a lot of problems on some of its ships in a fairly short space of time earlier this year. There was a fire on one of them, there was technical problems on a couple of others. That's had a really big impact on bookings. The volumes are right down. So to get people back on their ships, they've had to cut prices, and that's going to hit earnings.
Right. I mean, this is an industry that's very dependent on sort of, a particular type of traveller, and, it requires a sort of good economic environment, I guess, for these kind of companies to thrive. So if you're going to, sort of impose self-inflicted wounds on yourself, like having accidents and incidents on board ships, then it's just adding to the difficulties.
It does. The money that people have to save will be spent on other cruise ships. The other thing is that a lot of their customers are in the States, and although the US economy is recovering, the Carnival customers aren't necessarily at the very top end. They're perhaps slightly below that, more retired people, so they perhaps aren't benefiting quite so much from the recovery.
But I wonder whether investors tend to overreact sometimes to profit warnings. I mean, we saw this morning that Carnival's share price was down 14%, and it's now recovered a fair bit. Is there an element of overreaction here? And are the numbers actually as bad as they sort of look from a headline perspective?
I think the numbers are absolutely as bad as they look from a headline perspective. Earnings for this year will be lower than at any point in the past 10 years, even lower than last year when one of the company's ships, the Costa Concordia, capsized off Italy. So the numbers for this year are absolutely dreadful. What the interesting question is whether next year is going to be better, whether it can avoid the repeat of these operating incidents and encourage people back onto its ships paying a higher price. If it can do that, then things might recover fairly quickly, but that's going to be expensive.
Yeah, it's very hard to give a sort of outline or an outlook for an industry like this, which is so dependent on lots of external factors, isn't it? It
is, yes. There's certain amounts of self-help that the company will have to do. It's going to spend at least £700 million to upgrade its fleet and put right some of the things that could go wrong, particularly if there are fires. So it's going to spend more doing that. It's renewing its fleet as slightly as it does every year, but there's a wider question of if it'll have to spend a lot more on its ships to make them attractive enough to get people on board.
Yeah, okay, so it looks like it's been a difficult few months for Carnival and maybe a difficult couple of years ahead, because this is a very difficult industry to operate in. Thanks, Oliver.